What is the difference between open-ended and close-ended mutual fund? Hello everyone, welcome back to our channel. In today's video, we're going to break down the difference between open-ended and close-ended mutual funds. If you're just starting to invest or curious about mutual funds, this video will help you understand the basic differences. So let's get started. What are open-ended mutual funds? First, let's talk about open-ended mutual funds. These are the most common type of mutual funds that you will come across. In an open-ended fund, the number of units is not fixed. This means that investors can buy or sell units of the fund at any time. When you invest in an open-ended mutual fund, the mutual fund house will issue new units based on demand. And if you decide to sell your units, the fund house will buy them back. One important thing to note is that the price at which you buy or sell these units is based on the net asset value, NAV, which is calculated at the end of each trading day. So, the price fluctuates daily depending on the market value of the underlying assets in that fund. What are close-ended mutual funds? Now let's look at close-ended mutual funds. Unlike open-ended funds, close-ended funds have a fixed number of units. These funds are usually listed on a stock exchange and you can only buy or sell them through the exchange. The number of units is set when the fund is created and it doesn't change unless the fund decides to issue additional shares in a new offering. One key difference is that the price of close-ended funds doesn't depend on NAV directly. Instead, the price is determined by the market demand and supply, meaning it can go above or below the NAV. So if you're buying or selling close-ended funds on an exchange, the price may be different from the actual value of the underlying assets in the fund. Key differences between open-ended and close-ended mutual funds. So to summarize the main differences, liquidity. Open-ended funds allow you to buy or sell at any time, while close-ended funds can only be traded on the stock exchange. Pricing. Open-ended funds are bought and sold at NAV, whereas close-ended funds are bought and sold at market prices, which can vary from the NAV. Fund size. Open-ended funds can issue new units based on investor demand, but closed-ended funds have a fixed number of units. Both types of funds have their pros and cons, so it's important to consider your investment goals and time horizon when choosing between them. Alright, that's a quick overview of the difference between open-ended and closed-ended mutual funds. I hope this clears up any confusion. If you found this video useful, don't forget to like, subscribe and leave a comment if you have any questions. Thank you for watching and I'll see you in the next one. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.